Welcome to Spidel's Federal Tax Minute. I'm your host, Catherine Zidane. This week we're covering some things to keep in mind for taxpayers who have an HSA or an FSA as the end of the year approaches. Attend Spidel's Federal Tax Update webinar and be prepared for the 2024 filing season. This 8-hour course will cover everything that happened during the year, and you can see a list of topics covered and get registered at spidel.com under webinars. Taxpayers who have a health savings account or a health flex spending account through an employer's health plan should keep the following year-end considerations in mind. Taxpayers are only eligible to contribute to an HSA if they're covered by a qualified high-deductible health plan. The 2023 contribution limits to HSAs are $3,850 for self-only plans and $7,750 for family plans. Taxpayers age 55 and older at the end of the year are eligible for a $1,000 catch-up contribution. For family plans, the catch-up contribution is $1,000 per spouse if each are age 55 or older. Generally, taxpayers can make contributions for the year up to April 15th of the following year. But taxpayers who lose their qualified high-deductible health plan during the year generally cannot make additional contributions to their HSA unless they acquire coverage under another qualifying high-deductible health plan. In addition, taxpayers who will be changing their coverage on January 1st to a plan that does not allow HSA contributions cannot make additional contributions after the year end to their HSA, even if the contributions are made for the prior taxable year. Taxpayers who are not covered by a high-deductible health plan at the beginning of the year, but are covered by such a plan at the end of the year, can contribute up to the full annual HSA contribution amount for the tax year. Taxpayers who became eligible to contribute to an HSA during the year but did not maximize their contributions can make additional deductible contributions directly into their HSA by April 15, 2024, and claim the deduction on their 2023 return. Under health FSAs, employees elect to contribute pre-tax dollars into their FSA at the beginning of the plan year. As medical expenses are incurred during the year, the taxpayer can receive reimbursements from the FSA without realizing additional taxable income. The maximum FSA contribution limit for 2023 is $3,050. Taxpayers have access to the full amount of their annual pre-tax contributions as of the beginning of the plan year, even if the taxpayer hasn't actually withheld the full amount from their paycheck yet. Unlike an HSA, where the unused funds during the year stay in the account for the employee, FSA funds are lost if they're not used. But an FSA plan can allow participants to carry over up to 20% of the contribution limit to the following year, which would be $610 for 2023. Also, an FSA plan can allow for a grace period of up to 2.5 months for participants to use their prior year FSA balance, even for medical expenses incurred during that grace period. FSA participants should review their plan to determine whether any of their unused contributions can carry over to the following year and whether their plan allows for a grace period. Knowing the terms of the plan can help participants ensure that they won't lose any of the benefits they set aside from their wages. Spidel is offering a 1-hour webinar on December 4th on tax planning that will cover year-end planning for 2023 and 2024, new tax laws and expiring provisions, and planning for real estate investments and tax-deferred accounts. Get details and get registered at spidel.com under webinars. That's all for this week. Join us next time for another episode of Spidel's Federal Tax Minute.